Hey guys, it's Stan here. Today we're gonna talk about the Vision Fund. In this video you will learn what is the Vision Fund, who is behind it, why are they doing it, so what is the philosophy behind it, and of course the financial performance of this Vision Fund. So let's get started, guys. So first of all, what is this Vision Fund? Well, it has been founded by Son Masayoshi, sorry for my very bad Japanese accent, which is also the founder of SoftBank. SoftBank is not a bank, but it's a Japanese telecom company. And the Vision Fund has been funded in 2017. The reason why the Vision Fund is such a big deal, and that's why I'm also making a video about it, it's the biggest fund of all time because the amount which has been invested in this fund was $100 billion. You heard correctly, 100 billion with a B. So what is the purpose, what is the goal of this fund? Very simple. It's a long-term investment in digital transformation and artificial intelligence. In other words, this fund is a tech investment vehicle. Now that you know what the Vision Fund is, let's talk about why they're building it. The biggest financial reason why SoftBank and the SoftBank CEO and founder is doing the Vision Fund is because they want to diversify their business away from telecoms. As I just mentioned, SoftBank is a Japanese telecom company and they see that their growth is slowing down, so they want to diversify into new businesses. And by the way, so the founder, Son Masayoshi, is also likes to take big bets. For example, in 2000 he invested in Alibaba with his company. You all know Alibaba. It's like the Chinese Amazon today, the biggest, most valuable company in China. So that was a huge bet and a great bet for him, which of course gave him great returns on his big bet. Also gave him a lot of cash to spend on the transformation. Each time he has been selling little stakes from Alibaba to finance the transformation. And also it gave him the reputation of being a tech visionary. A little business story that the CEO of SoftBank is always telling, and he's talking about the best pitch of all time. When he went on a roadshow to ask investors if they wanted to join his Vision Fund, he went to Saudi Arabia first because he was saying that, well, they need to diversify away from oil, so they would be a great investor probably. And he went to Saudi Arabia to the prince for 45 minutes and he got 45 billion. So actually he's saying he got $1 billion per minute for his pitch, which is a pretty good ratio. And then of course you have Abu Dhabi, who also wants to diversify away from oil. And the rest, well, it's big tech. They have so much money, they have to invest it long term in somewhere. Okay, so now we are at the point where the fund has $100 billion. So what do you do with $100 billion? You can do multiple things. This is what they have done. First of all, their philosophy again was to invest in long term in digital transformation and artificial intelligence. That's the big philosophy behind it. How do you do that? Well, by buying shares of tech unicorns and very promising private startups. What are unicorns? Unicorns are startups which are overnight valued at above $1 billion, so very promising startups. To give you a few examples here, in the United States, for example, they bought shares from Uber, WeWork, and Slack, which is basically the WhatsApp of the business world. But they don't stop there. Since they are a Japanese firm, they also very well know the Asian market, so their goal is also to buy Asian unicorns, for example, less famous than the Americans, but also very good ones. For example, Coupang, which is the South Korean Amazon, or Flipkart, which is a huge Indian e-commerce platform. The goal of all these companies, and I give you a list where they have invested all, the goal here is to create a huge tech platform from which all companies can benefit. How can they benefit? I mean, once you have interest in all these businesses, you have huge know-how, you have obviously a huge size, and you can create a lot of synergies because of that know-how. Now let's talk performance. So what happened with the Vision Fund? As I mentioned, It was set up in 2017, now we are end of 2020, and so far the return has been 10%. Especially because of a pandemic boost, because as you all know, since beginning of the pandemic in February, March 2020, of course, all the tech stocks have risen. So that's what I mean by pandemic boost. So 10% return, that you could say over 3 years in such a risky business, pretty good. The problem is, let's compare it, when you compare it with the Nasdaq Tech Index, which is the technology index in the United States. This index over the same 3 years has done plus 100%. So if you compare the 10% versus the 100% of the Nasdaq, you can see that it's a pretty poor return from the Vision Fund. So now, what happened? Why such a bad return, especially for tech companies? Well, 2 reasons. WeWork and Uber disasters. You are probably familiar with both companies. Uber, ride-hailing company. WeWork, office rent company. And now let's try to analyze what happened and why it's a disaster. First of all, let's look at the problem. Actually, there have been 2 problems similar in these 2 companies that have led to such a bad performance from the Vision Fund. So the first reason is that the Vision Fund bought large stakes in these companies, and these companies were clearly overvalued and were loss-making companies since the start. When you look at Uber, for example, Uber has been set up since 2009, so it's 11 years old today, and they have they never made a profit, and this year they made more losses than revenue, Uber, so that's pretty incredible, and they burned about 9 billion of cash since 2009, so absolutely disastrous, and that's why they are super overvalued. And since they are public right now, since last year, they get heavily punished by the market because the market is not seeing a path to profitability. Right now all the rides are subsidized, so right now there is no way they can make profit even in the short term or even midterm. The second problem is a governance issue. In both cases, the founder was still the CEO. In both cases, the founder had way too much power, and in both cases, it was an egomaniac founder. So, for example, the guy from WeWork, they found him, he was smoking weed in his private jet while being on a business trip. So, this kind of stuff. Now that we know the problem, they're looking obviously for the solution, and this is the new strategy for the Vision Fund starting, well, more or less right now in 2020. So, first of all, less risk by buying smaller stakes. So far, as I mentioned, for example, they invested $9 billion in Uber, for example, a few years ago, so huge chunks of money. Right now, so and until 2020, so at the beginning of the year, the minimum investment of this Vision Fund was at least $100 million. They're reducing it right now. Right now, you see that they take stakes of 10, 20, 30 million dollars. So that's smaller bets, which means less risk and usually maybe better returns. Second point, they push their private companies to go public and then sell some shares after the initial public offering. What do I mean by that? Let's say they bought a company which was private at that point. They're gonna take them public right now at a very good valuation, and then they're gonna sell their shares, so their ownership inside, and make some money. So this is another way of increasing their returns. And then obviously, as I just mentioned, there was a pretty big governance issue, so here they're gonna reinforce governance in their businesses, and one way to do it is to take the businesses public, because it means that they're gonna be judged by the market, by all of us, by the big guys like BlackRock, for example, and they have much stricter rules. Next point is higher focus on profitability. Right now they were really focusing on scaling up, putting money into WeWork, for example, or Uber, or these kind of businesses, and grow them super fast, but by making a lot of losses so far. So now the shift is back to where it belongs, to profitability, and that's actually to avoid stuff that happened, for example, between Uber and Lyft So a price war, because obviously if you have a price war between two competitors, it's driving down the profits. So they are very focused on this one. As well as right now they're shifting a little bit their gears because they are also investing in big tech, in big listed tech companies such as Amazon, Google, Facebook, and these kind of companies. So what are the key takeaways of this Vision Fund? Well, there are a few. First of all, the Vision Fund is a huge non-US tech investor, $100 billion the fund. So until that, all the big venture capitalists and private equity companies who invest in this kind of businesses usually were all Americans. Now you have a huge player since 2017 coming in, which is not from the US. That's a first good point in my opinion. More competition. Second point, since they started to invest, you have more and more companies such as Microsoft, Apple, Google, and these kind of big players, as well as big countries like Norway and Qatar, the ones with the big funds, are also investing directly into companies. That's also new. Until that, only funds were doing it. Right now, a lot of companies and countries are also doing it directly. Then what we also have learned is that big bets are always risky business, and you have to see it more as a long-term strategy, because if you judge them on 3 or 4 years, maybe that's a bit too short to judge the performance of this entire structure. Maybe let's see in 5 or 10 years where Uber is gonna be. Then there is, believe it or not, there is Vision Fund 2 coming pretty soon, and the idea was to make it as big as the first one or even bigger. SoftBank had some big plans to make it like 108 billion or something like that. Right now they are far below because they're not raising enough money, so let's see what comes out of this whole Vision Fund 2. I'm curious to know. Then, and I think that's a very important point, the focus should be on profitability and governance. When you look at the disasters of WeWork and Uber so far, they were not focusing on profitability, they were only focusing on growth. And because of the price wars and because of bad governance, they have lost a lot of value, especially when you look at what happened with WeWork. They were at 47 billion valuation in 2019, now they are about 3 billion, something like that. Absolutely insane how much WeWork, how they imploded. And the last but not least, focus on non-US tech companies is getting bigger. When you look at Alibaba, Tencent, maybe 5 years ago nobody knew about them. Right now they are so big and very well demanded by the investors, as well as all the smaller guys like Coupang from South Korea or Flipkart from India, and these kind of companies are getting traction also in the US and in Europe. So it's getting pretty big. Now my question to you, what do you think about this kind of Vision Fund and this construction? Do you think it's worth exploring? Should they keep going, or is it too big and too risky? I would like to know. Please comment in the comment section below. I wanted to tell you that I post once a week every Sunday, so make sure to stay tuned. If you want to know more about corporate finance and market finance, you know where to find me. Have a great week. See you soon, guys. Bye bye.